Hello, welcome to this podcast. My name is Nivedita Roy from Mirae Asset Sharekhan. Today, we're interviewing Mr. Neelesh Surana, the Chief Investment Officer of Mirae Asset AMC. Welcome to this podcast, Mr. Neelesh. It's really great to have you here today.
Thanks for inviting me, Nivedita. It's my pleasure.
So, now as 2026 approaches, what sectors or themes are you keeping an eye on in which you see some promise? And what do you think about the markets in 2026?
Yeah, so I think I'm as a house we remain quite constructive on how the Indian macros are, how the economy is shaping up, and thus on equities and the returns from the markets. We are positive. And in we have seen that there was a slowdown in the economy, and then we have seen a lot of measures taken by from the monetary side, on the fiscal side. I think the full impact of that, despite the headwinds of tariffs, etc., would come in 2026 and beyond. And India has certain structural growth drivers related to this potential on the consumption side, potential on the investment side, on the export side, new growth drivers, be it from the services exports of traction in GCCs or manufacturing export, which will happen as we get our share of manufacturing. And there's a lot of ecosystem which is getting evolved in many areas. Overall, the economy is well poised to grow at a very decent pace of 6.5, 7% and the earnings, which were slightly muted in last couple of years, would mean revert. And in that context, I see the valuations of the market, while it is reasonable, returns will be made in sync with the earnings growth. So we remain positive for 2026 and beyond. But I would say that keep the expectations of return low. Keep the expectation in the range of 12 to 15 odd percent, which is a decent number. Why I'm saying this decent is also in context that our macros are very solid and our inflation is less. So for an investor, they have to look at that returns are nominal, but ideally in a lower inflation, we have to see the real returns. The real return is basically what returns you get minus the inflation. On your question on the sectors, I think choice is widespread. In this market has less dispersion. I don't see any sector which is available very cheap, $1 for 50 cents. I mean, which is, and where we are extremely sort of positive because the valuation is comforting. But we see decent returns or decent opportunities spread across sectors. Among the larger sectors like BFSI, we see a lot of opportunities there. There's one area where we are slightly more positive, where earnings growth was missing since COVID, that is mass consumption. And mass consumption, discretionary mass consumption, which was impacted earlier by higher inflation, initially by COVID, etc. And you would have heard of the term like K-shaped recovery and all. We see that slowly getting traction, and for various sort of tailwinds, reforms and moves by the government and otherwise in the system. We had interest rate reduction of 125 basis points this year, 2025. We had direct tax cut and also indirect tax cuts, GST 2.0, that will help on the purchasing power. Inflation is sort of low. We have back-to-back good monsoon, and we have the 8th pay commission starting next year coming in. So if you connect all the dots, we would see that mass consumption revival would happen. So there are many businesses where earnings growth have been muted in that space, and that we see particularly sort of interesting. But that aside, I mean, opportunities are spread across most of these sectors, and there is no particular sector where I can call out is very cheap.
Okay, I see. So there is some opportunity in sectors, but investors have to keep their expectations.
Yeah, expectation low, and I think diversified funds are best positioned. Yeah,
funds.
because you have opportunities spread across sectors, and returns will be in sync with the earnings growth. So the best approach for core allocation should be diversified products or products which invest across sectors.
Okay, I see. And also, I would like to know, what is Mirae's approach towards NFOs? What is your go-to-market strategy for new funds?
For the new funds? Yeah.
Yes.
No, see here in the regulator has a particular guideline in terms of how the basic products, and we are almost there in most of the product. offering. There were gaps in our portfolio which we have completed as a house over the last 5 years. We have launched with various hybrid products ranging from conservative hybrid, equity savings to aggressive hybrid. Then, of course, we had the balanced advantage fund, we have multi-asset fund, we had the small cap, flexi cap, all multi cap, all that has come in last 5 years. So most of the products on the active side, as permitted by the regulator, we are almost there in the core categories. And I already you had a question on the ETF, and we're doing a lot of innovation. So the approach is to the product has to be should make sense from longer term wealth creation, and that's the broad approach of how we launch NFOs. Yeah.
Okay, so the focus is on long-term wealth creation.
Absolutely. In equities is about, I mean, the only thing which we communicate to investors, which we need is time. So
Yes.
you have to invest in equities if you have minimum 3 years, ideally 5 years.
Okay.
And with that lens, there are enough and more opportunities in most of the products existing to create sort of wealth here.
Okay, so time is everything for investors.
Time is one of the most important thing in equities.
Okay.
Yeah. It's a asset class which has generated phenomenal wealth over the last 4 decades, and there is enough potential, but there could be volatility in the interim.
Okay.
So that's the reason we say that you allocate money if you have time on your side.
Can you tell me how your experience from engineering to fund management, how has it shaped your approach towards portfolio management, especially during volatile periods like downturns?
Yeah, so Nivedita, I would say that we touched earlier, there's a very institutional setup. So it's not that how my experience, there is a 21 member team, and then there are very people with senior sort of experience to youngsters. So the most important thing I would like to emphasize is Mirae Mutual Fund as a house is extremely process oriented. So the 21 member team, and there are a set of processes. We have a lot of, I would say, industry leading processes, whether it is sector neutral portfolio, a concept of gatekeeper who will do the compliance of the processes. So it helps in covering the sectors and the stocks irrespective of market volatility. Right. So the intensity, and we touched on the primary research, I think helps us navigate across market cycle. So I would like to stress it's more on the process part of 21 member team, and which is constantly improving. We are much better than what we were 5 years back, and there's a lot of processes we constantly review. There are processes we weed out which are not so important, we strengthen which are very important. And without going into the technicality and nuances of it, I think the approach is to be extremely process oriented, improves the depth of research. In many of the sectors, there are 2 people who are covering it, and most of our fund managers are also looking at certain areas of research. So all that collectively help us get a very comprehensive evaluation of underlying stock in terms of the underlying businesses, and arrive at with reasonable confidence the value. As I said, prices fluctuates. When you said volatility, in a bad time it comes down, prices come down, in good times it go up. That is not in our hand. The understanding of value of the business is crucial, and it's not hinging to one individual. How do we institutionalize that? And that, as I had mentioned, that there are multiple processes which the team constantly, and the rigor of research is, I think, is our attempt where we try to solidify that so that we get a very decent understanding of the value of the business. And I think that is one factor, one area which I'd like to sort of highlight here.
All right. So you mentioned you have a 21 member team.
Yes.
And one of the key differentiators that you also mentioned was primary research, right? That your research desk conducts. So can you tell me a little bit more about this primary research?
Yeah, so all well-managed fund house would have do their own sort of research. So as I was mentioning, is that this business is very people-oriented. So they decide the process and what is the approach. And as we say, people processes, and philosophy. These are the 3P in terms of the key success factors. So when I say 21 member team with various cohorts in terms of experience, etc., I think there are many processes where when we cover about 650 odd stocks, how do we cover it? What intensity we look at those companies? How do we study the balance sheet? How frequently we meet the management? And how there are various processes in terms of how modeling is done. And what is the approach in terms of the collaboration between the fund manager and research analyst? So there are a host of processes for covering the stock, and then having identified how do you do maintenance coverage. So I think and that's what I was trying to say, that primary research is when we say primary research is our own research. So while we do get service from more than 40 odd brokers from institutional team, which is very well respected, but our core, what we are dependent, is our own research. So most of the stocks which we have invested, we have our own models. In fact, all of the stocks obviously would have our own models, our own DCF, our own visit notes. And these are the factors which help strengthen the conviction when you buy a particular stock and hold it for an extended period of time.
All right. And also, can you discuss the recent performance drivers for funds under your management, like your flagship schemes?
Yeah, so we touched on the longer term track record. As I said, we are in the 18th year running, and since inception, all the products which are, let's say, 10-year old, they have been in first quartile. Yeah, I think your question is alluding towards like 2024 and
Yes.
was a bit soft in terms of the performance. I
Yep.
see it is more of a fund should be looked from a longer term lens of 5 year plus or so. What has led to very strong recovery in 2025? All our funds on a 1 year basis are first quartile. Most of the important funds are all in the top quartile. I think the recovery, I would say, the drawdown or softness in performance in calendar year 23 and 24, I would say, is more quotational. What happens is, like when you buy a particular stock, a particular set of stocks, sometimes you may go wrong before going right. Right, or sometimes certain sectors may be not in favor. For example, in 22, 23, 24, we had seen only investment oriented businesses do well, and premium consumption, the K-shaped recovery. These are the two large top-down themes did well, but many other sectors didn't do as well, whether it is pharma, whether it is mass consumption, etc. Wherever the portfolio was fairly well balanced. So we have seen that even out in last 1 year. So without any surgery to the portfolio or changes to the portfolio, the performance has bounced back. This is more from a near-term perspective. And the moment you look at 5 and 10-year track record of most of our flagship products, they are meeting two things. They are outperforming the benchmark, and they have a decent quartile ranking vis-a-vis the peers.
Thank you so much for sharing your perspective today and about what sets Mirae Asset AMC's approach apart from other AMCs.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully before investing.